Session 4, our final session in this course. Introduction to financial statements. What are financial statements? Financial statements are the financial reports generated from the accounting information system of a business. In every business, there are many financial reports that can be generated. We are going to focus on the three major financial statements every business must have. These three financial statements include, number 1, the income statement, also referred to as the profit and loss account. Number 2, the statement of financial position, also known as the balance sheet. Number 3, the statement of cash flow, also referred to as the cash flow statement. I would explain them one after the other. The income statement. The income statement is the report of the business performance over a period of time. A period could be 1 month, could be a week, it could be a quarter, it could be half year, it could be a full year. It contains all the sales made during that period. It reports all the expenses incurred during that period. And lastly, it shows the difference between all the revenue less the expenses incurred, which is either profit or loss. A profit is when the revenue, which is also referred to as sales, the total revenue for that period exceeds the total expenses incurred for that period. That is when we have profit. In a situation where all the expenses incurred exceeds the revenue, we have a loss. So the income statement is that report that tells any user how the business has performed over a period of time. A period can be a month, a quarter, a year, as I explained earlier on. The second financial statement is called the statement of financial position, also known as the balance sheet. The balance sheet is a financial statement that tells the user the value of a business as at a specific date. The value of the business means the worth of the business as at that date. This financial statement contains three major components. Number 1, the assets of the business. Number 2, the liability of the business. Number 3, the owner's equity in the business. What do we mean by the assets of the business? The assets of the business include all the resources owned by the business. This includes the cash the business owns, the vehicles the business owns, the equipment the business owns, the stock the business owns, the accounts receivables, also known as debtors, the customers that are owing. Liabilities include all the amounts the business is owing anybody. Examples include overdrafts, loans, accounts payables, which means suppliers that the business is still owing money. These are all liabilities. And the last component of the balance sheet is owner's equity. Owner's equity represents the stake of the owners in the business. It has two major components: the amount the owners use to start the business, and also the profit that is reinvested in the business by the owners. The owner's stake is made up of these two items included in the statement of financial position. The last financial statement is the statement of cash flow. The statement of cash flow is that financial statement that explains the movement of cash within a business. The movement of cash can either be inflow or an outflow. Inflow of cash includes cash from sales, cash from loan, cash from owners. Outflows include payment of salaries, payment of rent, payment for various purchases. These are outflow. The statement of cash flow clearly explains how much cash came into the business over a period of time and how much cash has been spent. These three financial statements that I just explained serve different purposes. The income statement tells you how your business has performed over a period of time. The statement of financial position tells you the value of your business as at a specific date, while the statement of cash flow tells you your cash position, how much cash has come in and how much cash has gone out of the business. These three key financial statements are very important for decision making by very key stakeholders of the business. Informed decisions are made relying on the information generated from the accounting information system, and this helps to make the right decisions that will grow your business. This also serves as part of the items on your business dashboard to help you make the right decision for your business. Ensure you generate these financial statements for your business at least monthly to help grow your business. This is the end of session 4.